What's going on, you guys? My name is Zach Hartley, and in this video I'm going to walk you through the two very painful lessons that Facebook stock has taught me over the last few months so that hopefully you don't make the same mistakes. Let's dive right in. Okay, so the first lesson here is that I need to be buying ahead of the trend. The reason I say this is because that the metaverse became a major investing trend as soon as Facebook announced that they were going to transition to a metaverse company. And so when Facebook made that announcement, anything to do with the metaverse just absolutely skyrocketed, and it was very, very clear that that was going to happen. There were a lot of signs, there were a lot of indications that that was going to happen, and I completely missed all of those signs and indications. And so I need to be buying ahead of the trend, ahead of that announcement, and I need to be preemptive in my investments. But first, let me show you what I mean by everything skyrocketed. So first, this is the token Mana, M-A-N-A. This is a token that is used in Decentraland, which is a metaverse that you can go into and interact in and buy and sell different things. And as you can see here on October 28th, when Facebook made that announcement, the price of Mana went from like 80 cents to above $4, and it capped out at just under $6. So it absolutely skyrocketed. Another one that did pretty much the same thing was the token called Sand. This goes into the Decentraland called Sandbox. This is used in the metaverse called Sandbox, and this token went from, again, around 80 cents to a high of almost $8.50, which is absolutely just mind-boggling. And all of this happened in a matter of a month, and it was directly following the Facebook announcement. So the correlation here is very direct and it's very easy to see. And even in the public stock world, you can see here, this is a company called Matterport, and October 28th, right in here, when Facebook made the announcement, the stock then gapped up the next 2 days. And within a month, it was then testing $38 from a starting point of around $18 or $19. The stock literally went up by 100% in just a matter of a month. And all of this was directly following the announcement by Facebook. And so Facebook very clearly established the trend around the metaverse, put a whole lot of focus on the metaverse. And unfortunately for me, I completely missed the ball. I completely missed the opportunity because I knew this was going to happen. There were tons of articles, tons of rumors, tons of reports that Facebook was planning to rebrand with a new name, a new focus, and that they were going to focus on the metaverse. Here is just one example of it right here. Here's another example from Washington Post, and here's a third example from Forbes. So everybody knew that this was happening. Everybody knew that Facebook was coming out with a big announcement. It was scheduled, and everybody knew that there was going to be a big focus on the metaverse. And unfortunately, I dropped the ball. I didn't buy any of the metaverse plays. I didn't get in early, and I completely missed the trend. I got in late on the ride up. I wasn't able to capitalize on the gains that I really should have had, and I'm really disappointed that I didn't take advantage of that opportunity because I literally read all of these articles. I went through, I was well aware of this like a week before it happened, and unfortunately, I did not take advantage. I did not buy into the Matterport, or I didn't buy into the metaverse stocks. I didn't buy into the metaverse coins, and as you can see, if we had done that, we would have done extremely well. So that is lesson number one, is basically as soon as you know that there's going to be a major trend change, or when a major company is about to make a major announcement, the goal and what I should be looking for is to buy the small securities that will benefit the most. So if Facebook, one of the largest companies in the world, says that they're going to dedicate all of their power to building out the metaverse, I should be probably buying all of the smaller securities that are completely dedicated to the metaverse. And if I had done that, we would have made a ton of money, and unfortunately, I really dropped the ball on that one. So I'm a little bit disappointed. That is the first lesson and the first kind of pain that I felt from Facebook. And the second pain here came with the earnings. So this one happened literally just kind of a week or two ago when Facebook reported their earnings on February 2nd, 2022, and the stock price fell by 25%. And yes, I was holding the stock. I had bought some shares and it did absolutely terribly. I lost a bunch of money on it. My stocks actually sold out on a stop loss today. So I'm really, really disappointed with how that went, and Facebook is just causing a whole lot of pain in my life. But basically, here's what happened with earnings. So revenue technically was higher than it was in the comparable quarter, and free cash flow was still good. Like, the company is not going anywhere. They're not deteriorating yet. Like, nothing is wrong with the company right now from an overall perspective. However, there were some red flags that really spooked some investors, starting with the platform users declined for the first time in history. for the first time in the company's history, they have lower users than they had in the quarter before, which is just not good at all. It's a major red flag, and it's a major concern for a company and a platform that is based on monetizing their users. So that is number one. Number two here is the privacy changes from Apple have really impacted Facebook and their ability to attract consumers and provide advertisers with great advertising ROAS, or return on ad spend, and basically great advertising results. And unfortunately, it's having a very negative impact to the bottom line, and they're seeing increased competition from TikTok and other platforms. And the worst part of that is not necessarily the competition, but it is forcing Facebook to change, such as adapting to Reels and increasing how much people watch Reels. But unfortunately, Reels don't monetize nearly as much as the general news feed, or as much as Instagram does, or the regular features that Facebook has relied on for the last 10 years. They're now transitioning, they're adding new features like Reels, and Reels just doesn't bring in as much money for the company. And so there's a couple of major red flags here for Facebook, and because of that, the stock dropped by 25%. And unfortunately, in my head, all of these red flags we knew about. None of them were new, none of them were a major surprise. We all knew that they could happen. For instance, we know that TikTok is growing. We know that more and more people are using TikTok. We also know that the privacy changes have affected companies like this, such as Snapchat. Snapchat took a pretty big hit because of the privacy changes of Apple. We should have been able to forecast that it was probably going to happen to Facebook, and you can see that from their new users, it is completely leveling off. Their growth over the last few quarters has been slowing down, and eventually it was going to correct and go negative. And unfortunately, all three of these things pretty much happened at the same time. So the lesson that I learned here, and the lesson that I really need to focus on, is that I was too confident in Facebook as a business. I thought Zuckerberg and the ad model and just how ingrained Facebook and Instagram and WhatsApp are into our life, I thought that was enough to just continually push them higher and higher, and it wasn't. There's a couple of industry trends that are happening right now that are giving Facebook a little bit of a pushback, and if I had done more due diligence on the industry, hopefully I would have been able to see that. Instead of just relying on what I know about Facebook as a company, I should have done more due diligence on what is happening in the industry and around the world and what consumers are really doing, and I didn't do enough due diligence. I bought into Facebook probably without enough information, and that was a major cause for pain, cause for loss, and I'm feeling it right now. So I want to share that with you guys so that you can understand what I did wrong, how I can correct it in the future, and what I need to do to avoid these mistakes. Now, if you're interested in seeing my future trades, my future analysis, and what I'm doing to correct these mistakes, then definitely consider checking out my Discord chat. That's where I'm posting all of my trades, my weekly watch list, and I'm trying to build a community of traders where everybody can ask me anything they want, as well as contribute to the community, so that we're all sharing our resources, sharing our research, sharing our due diligence, and we're not all sitting at home alone. If you're interested in joining that, it is $5 per month, and I would love to have you there. Definitely consider hitting that like and subscribe button if you got any value out of this video, and I wish you all the best trading and investing in the future. We will talk to you soon, and see you in the next video.